All right, this will be a video covering our net worth update for February 1st, 2026. And nothing major actually happening this month, primarily because I have a tooth infection I need to treat. And so I will be investing in that to make sure I maintain my health. But let's go ahead and just cover the numbers real quick. So BTSAX, well, really the total investments were at 6,113. Year to date return 1.56%. Emergency fund is at 18,807, halfway to our goal. I have 1 ounce of silver, which has grown in value actually, which is cool. Up from $73 last month to $86.61. I have 1 share of IAUM for some gold exposure, which is at $48. Lost a little bit there. And then the total value is roughly 24,921. And so just a note here that, yes, so I have a tooth infection. And so my numbers really haven't changed much because I'll be having to invest in treatment there. So now, biggest actions I've taken this month. So there's been a few things going on that I've been doing and just keeping an eye on. The first is that I picked up some gold exposure with the share of IAUM. Next, I've been learning more about international funds and the South Korean stock market, particularly because as we experience a weaker U.S. dollar or just go through times when we do, I've been keeping an eye on the improving returns from those markets outside of the U.S. For example, VXUS has done really well last year. And then when you look at the South Korean stock market, for example, they've been going through something very interesting there. Essentially, their stock market experienced roughly a return of 91% last year, like 91%, which is crazy. But a lot of what's driving that actually is because they need to essentially just start attracting more foreign capital, due to what I would say right now is just declining internal capital because of shrinking demographics and things of that nature. And one issue they're running into right now is that, for example, like pension funds and such who depend on certain levels of returns for retirement security and capital inflows and such, they essentially need more resources. And so I'm still learning a lot about how all of that works. So I don't want to try and make it sound like I understand that stuff 100% because I definitely don't. But it's something I am keeping an eye on because it seems like at the end of the day, what's happening is a lot of the major companies in Korea have been intentionally devaluing themselves for so long, and to the point right now where it's keeping a lot of foreign capital at bay. So now they're taking steps to reverse those trends, but obviously, right, it remains to be seen how that pans out. But yeah, it had a stellar year last year. And let's see next. Reading up on the new Fed chair nominee. So as of recording this, it seems to be Kevin Warsh, who historically seems to have a hawkish stance when it comes to inflation. However, as with all things, past performance doesn't, indicate future results. And so will he behave that way when he's actually in the chair? It remains to be seen. But that's who seems to be the nominee right now. And obviously he hasn't been confirmed yet, at least as of writing this, recording this video. Next, understanding the labor market situation. So been keeping a close eye on that as well. There's been no shortage of talk about how, it's been fairly, I guess you say weaker, but still steady, right? And obviously, when you look at companies like Amazon, for example, who just laid off another 16,000 workers, it starts to make you wonder if something else is cracking. But at the end of the day, Amazon still employs like a crap ton of people. So how much can you look into this stuff? How much of it do you just go into like a wait and see stance? I think right now we're just a little bit more in that camp of like waiting and seeing. But at least right now, it seems to be weaker, but somewhat steady. But is that the truth? Who knows, right? Next, watching for AI payoffs. So obviously the AI bubble talk is still going on, and for understandable reasons, in my opinion. You can point back to companies like Oracle, for example, who just got their butt whipped. With stuff that hasn't panned out. Like, for example, one of their financing companies backing out from building a data center, right? Fronting the money to do that. But then on the other hand, you also have companies like Google and Meta and such who can afford to just keep spending billions of dollars into AI because AI is not their core business model. It's ads, right, and things of that nature. So they just have a lot of resources at their disposal. Um, and then finally, just monitoring the silver and gold shakeout from last Friday. So, in case you didn't know, like, I mean, really across the board, I would say general, everything went down. But gold and silver definitely took a beating. And so it remains to be seen why. Like, there's been different issues pointed to, like, margin requirements getting updated, the new Fed chair coming into play. You also have what profit taking as well, right? And obviously, when metals are really anything starts to rip, you know, you start to feel better about it when you're early on, but then when you start getting in later and later and later, then your hands start to get itchy, right? And then so eventually the domino eventually topples, right? Some people start to sell, and then others who have more to lose start to sell, right? And it just kind of creates this cascading effect to where a lot of people just start taking profits as well. So truthfully, it could be all of those things and more, but stuff I'm still keeping an eye on. So yeah, guys, that's it for this one this month. Again, nothing crazy. I'm just going to be really just concentrating on personal health for the next couple of weeks, and then getting back into the swing of things. So, yep, that's it until March. And until then, peace.